Why is it important to diversify investments? Today we are talking about diversification and the importance of doing so that we can minimize our losses. I am Tiffany Thomas, your wealth mentor. I achieved financial freedom in my 30s and became a millionaire at 40. I'm here to help you do that even earlier and easier. So let's dive right in. All right, in today's video, we are unlocking the secret of minimizing risk and maximizing returns. It is all about diversifying our investments. And first off, what does diversification really mean? Essentially, we are investing in different items. So it can be different asset classes or even different just types of investments in the stock market. We are not just selecting one single investment and hoping that that investment goes up over time. For example, we can diversify by investing in real estate and the stock market. That's actually what I like to do. I like to have diversification among different asset classes. So I've chosen to invest in buy and hold real estate properties. And then also in the stock market, I invest in stocks. And I do that through an index fund plus a few different individual stocks. But honestly, when you are diversifying, you don't have to invest in real estate and the stock market. You can definitely just invest in the stock market and still diversify your investments within the stock market. Or you can select just real estate and make sure that you have multiple properties you are investing in so that you aren't just banking on one property doing really well for you. Okay, now that we have a little bit better grasp on what diversification is, why is it important to diversify our investments? The first reason to diversify is to help protect our portfolio against market volatility. So the market, whether it's real estate or the stock market, is going to go up and down over time, and the long term, it is going to go up. But in that short term, it's definitely going to go up and down, and it could go up pretty high and then down pretty high or pretty low. So we want to protect ourselves against that market volatility because different assets are going to react differently in certain conditions. For example, during 2020, the stock market took a huge dip and the value of our investments in the stock market dropped significantly. And I saw that drop for sure, but I also had my real estate investment properties, and I was able to still collect cash flow from those properties. And that did not happen for everyone. Some people lost their renters or their renters stopped making payments, but that's not always going to be the case. Sometimes real estate will perform better than the stock market, or the stock market could perform better than real estate. It's nice if we have some diversification so that we aren't so worried about having all of our investments inside of just one investment. And that includes investments within the stock market. You can be investing in different sectors. So you could have some in the technology sector and the healthcare sector. And one of those may be outperforming the other during certain market conditions. So by diversifying our investments, we can reduce that impact that the market fluctuations are going to have on our portfolio. The second reason on why it is important to diversify investments is to have the potential to enhance our returns. If we are just banking on one single investment to give us really high returns and that investment tanks, then there's no way we're going to get high returns. We don't have any other type of investment. For example, if we just chose to invest in one stock, maybe if you've heard of Blockbuster, if you had all of your money in Blockbuster and when it went out of business, you would have lost all of your money. But if you were diversifying, if you had multiple companies, if you still had Blockbuster, but maybe you had McDonald's and Amazon, Google, Costco, Pepsi, all different companies. Some of those will do well, while others may not. So if we are investing a little bit in each of those different companies, then we don't have to bank on one company to help us enhance our returns. We can spread that risk across multiple companies. It will increase our chance of consistent long-term growth. And then the third reason on why it is important to diversify investments is so that we can take advantage of different economic cycles that are happening. For example, during certain times of the year, it may be less expensive to purchase oil or gas. And other times of the year, it may be better to be in the healthcare sector. There are just so many different sectors out there, and they have high points and low points during the year. So we can take advantage of those economic cycles if we are diversifying. And that being said, I am more of a long-term investor. So I like to diversify my investments, especially within the stock market. I like investing in an index fund. If you want to know which one, I have another video about that. I will leave a link above. You can check it out later on. But I like having that index fund because it has a whole bunch of companies inside of just that one fund. So I'm getting exposure to many different sectors. And that way I don't have to be so active with my investing. I can still make it very passive and take advantage of those economic cycles and not worry so much about the market volatility and still enhance my returns. And honestly, that is what I have found to work best for me, is to take that longer term approach. I'm not about getting a quick win or making a really huge gain within just a few days or within a month. I'm more about just kind of passively investing in that same index fund over and over because I know it will grow in the long term. And then with the few different individual companies or stocks that I am investing in, I'm choosing just good, stable companies that have been around for a while, and I know they will continue to increase in price over time. And of course, I am keeping my eye on those companies. So if there is a point where maybe their price does drop for a certain economic reason, then I could take advantage of that and invest even more in that company. I'm not so worried about them going out of business because I've done my homework, and from what I can see, they are good, stable companies. And since I am keeping my eye on them, I can start to see if maybe the leadership of the company has changed and they don't seem to be like they're going to be a leader in that industry anymore, then I can definitely sell my investments and put that into the index fund or into another company that I'm already invested in that has the potential for a better return for me. And honestly, a lot of people are fearful to invest in the stock market, but when we can take this view of diversifying our investments, then it means that we are most likely not going to lose money in the stock market. If we are just investing in one single investment, just one company, then we have a high potential for that company to go out of business and then we would lose our money. But if we are diversifying, if we are investing in an index fund that has a whole bunch of companies inside of it, then the chances of us losing all of our money are very, very slim. And if we do end up losing all of our money, then something else is going on in the world, and I hope you have your food storage. And now I just want to share a few tips on diversifying your investing. The first one I want to talk about is asset allocation. For example, you can have investments in the stock market and in real estate. And if you only want to invest in the stock market, you can definitely invest in stocks and in bonds. So you can choose a percentage to put in stocks versus bonds, depending on your time horizon, how long you have to invest, and your risk tolerance. How risky can you be without selling your investments, without getting super nervous and locking in losses? For me personally, within the stock market, I like investing only in stocks right now. I do not have any bonds because stocks are going to grow my wealth, and that is still the stage that I'm in. I still want to grow my wealth. And then bonds are more about preserving your wealth. So depending on how close you are to retirement, or if you are already in retirement, you may want to have some amount in bonds or the majority in bonds, depending on where you are. But you can decide for yourself if you want to grow your wealth, you can stay with stocks. If you want to preserve your wealth, you can go with bonds or have a mixture. But that way you are diversifying among asset classes because you're in stocks and in bonds. And a second point that I want to bring up is that you can invest in geographical regions. So if you want to, you can invest internationally. You wouldn't just have to stay within the US stock market. But that being said, I actually like just investing in the US stock market because I feel like I'm still getting exposure to the international markets because a lot of US businesses actually do their business overseas, but it really just depends on your preference. And then the third item that I want to bring up is to review your investments over time. We don't want to just continue to invest and not really pay attention to what we are investing in. While we can make it passive, especially if we are investing in index funds, we still want to keep an eye on our investments and be informed about the investment world. What else is happening? Is there something we can invest in that is going to give us a better return? Or do we need to adjust our asset allocation? And it's not that you have to check your investments every single day or check the stock market every single day. That's probably going to cause a lot of stress and a lot of anxiety. But you can check it depending on how you are investing. You can check it quarterly or even semi-annually. Or if you really want to be just super passive and you are in a really good index fund, maybe once a year. And if you're thinking, Tiffany, I'm not really sure how to diversify properly, or I'm not really sure about investing in the stock market, I have a free masterclass where I go over how I can help you invest in the stock market. I will leave a link below in the description. You can click on that and check out the free masterclass. Comment below and tell me if you are going to diversify your investments. And if you found this video helpful, please hit that like button and share it with someone else who would like to hear this information. And hit the subscribe button to subscribe to my YouTube channel and hit the little bell to get notified on when I post new videos. And if you want to see even more awesome content from me, make sure and check out the videos on the side of the screen. Thanks so much for watching. I'll see you in the next video.